Hey, welcome back. It's Jason Walter here. Are you thinking about buying a house and you're wondering if now is a good time to do so? Or are you thinking about selling your house and moving elsewhere and maybe even out of state? In today's real estate market update, I'm going to provide you with some data that shows that there was a sudden drop in mortgage loan forbearances. I'm also going to touch on the eviction crisis that a lot of people are talking about and are predicting is going to occur in 2021. I'll also discuss how all these things will affect our real estate market going forward into next year, so stay tuned. And by the way, if you're new here, welcome. I post videos about how this pandemic is affecting our real estate market as well as personal finance topics. So I hope you appreciate these videos and consider subscribing to the channel and join the family. Also, hit the like button if you appreciate real estate market updates just like this one. Okay, let's dive into the video, and I have to share with you this big news, and that is that mortgage loan forbearances fell below 3 million for the first time since April. And this is according to Black Knight, which is a data and analytics firm for the mortgage and real estate industry. And they reported just a few days ago that over the past 7 days, forbearances plummeted by 649,000 from the prior week. And this is a 18% reduction in the number of active forbearances. Black Knight also reports that this is the largest single week decline since the beginning of the pandemic. And keep in mind, homeowners who are experiencing a financial hardship due to COVID-19 were allowed to enter into a mortgage loan forbearance thanks to the CARES Act that was passed on March 27th of this year. This allowed homeowners to stop paying their mortgages for 180 days, plus a potential 180 days thereafter, so potentially for up to 360 days. Therefore, because homeowners were allowed to enter into a forbearance as of the end of March, the end of September is really the earliest time period we're going to be seeing a lot of people fall off or exit their mortgage loan forbearance, because that is the end of that 180-day period. So it really makes sense that we're seeing the decline in the number of forbearances right now. However, as you can see on this graph from Black Knight, total active forbearance plans peaked right around mid-May. So in turn, I would expect a decrease in forbearances in greater numbers, potentially 6 months from that point, which would put us at around mid-November. In addition, we may see another drop of forbearances around April of next year, because that's going to be the earliest time period where people are going to be falling off that 360-day forbearance plan. It's my opinion that a significant amount of people who are currently in forbearance are doing what's called an optional forbearance, meaning that they entered into a forbearance, they had some economic uncertainty to begin with, but they continued their forbearance just because they could. Also, it's so easy to enter into a forbearance because due to the CARES Act, all you had to do was a test that you have a financial hardship due to COVID-19. You did not have to provide any documentation to prove that you are having a financial hardship. However, of course, there's still a lot of people who have a financial hardship due to COVID-19, and they are still in forbearance. Okay, so going back to this report from Black Knight, Black Knight reports that the national forbearance rate has decreased to 5.6% right now. And this equates to around 3 million homeowners who are currently in forbearance. Remember, the number was 6.81% the prior week, and that equated to 3.4 million homeowners who were in mortgage loan forbearance, according to the MBA. Therefore, we've seen a significant improvement for those who are currently in forbearance, down from 6.8% to 5.6%. So that's great news. Black Knight also announced that VA and FHA loans also saw declines in mortgage loan forbearances. So that was really great to see that, because those people or those homeowners seem to be more adversely affected by this pandemic. So a reduction of 18% of those who are currently in forbearance is obviously a positive trend. So that's great to see. I know a lot of people are talking about these forbearances that are going to be causing foreclosures, but with this sudden drop of forbearances, it's going to be really interesting to see if this trend continues downward. And full disclosure here, I'm a real estate agent in the greater Sacramento area, so I help people buy and sell houses in my area. However, the purpose of this video is not to tell you now is the time to buy a house or now is the time to sell your house. That is not the purpose of this video. You can make your own decision regarding that. However, it's my hope that this information in this video, as well as my other housing market update videos, will be useful information for you so you can take that information and make a more informed decision about whether now is a good time to buy or sell a home. Okay, so going back to this drop in mortgage loan forbearances, it's my opinion that we saw this sudden decrease in mortgage loan forbearances for one of two reasons. Number one, their financial circumstances have improved since they entered into a mortgage loan forbearance. And number two, they want to take advantage of near record low interest rates in order to do a refinance. And right now, by the way, according to Freddie Mac, for a 30-year fixed rate mortgage, the rate right now is only 2.87% on average. And real quick, I want to give you a reminder because speaking of refinancing, the adverse market refinance fee will be implemented on December 1st. And this is an additional fee that's starting on December 1st that is equal to 0.5% of the loan balance. So for a refinance of a $200,000 loan, that's going to be an additional cost of $1,000. However, this fee is waived for loan balances of less than $125,000. So if you haven't refinanced yet and are considering doing a refi, I'd recommend to reach out to your loan officer or your lender right away to see if you can get around paying for this 0.5% fee. Okay, now we talked about the drop in mortgage loan forbearances. So now let's talk about the eviction crisis that some people are predicting is going to occur next year due to this high unemployment rate of 7.9% right now, the economic uncertainty, and of course this eviction moratorium that is set to expire in January of next year. In regards to that, I want to share some news from the National Multifamily Housing Council because they track rent paid for around 11 million apartment units in the United States. First, as you can see, 94.6% paid their rent in September compared to 95.5% from September 2019. So we're not too far off. As you can see from last year compared to this year, the difference is only about 1% when looking at rent paid in full. So obviously at the time of this video, which is mid-October, we do not have October results. However, they do have the first week of October, and let me share that with you right now. So for October 2020, 79.4% paid their rent in full during the first week of October. This is the highest percentage that we've seen since June, so this is a great indicator. In addition, when you compare this to October last year, it's exactly the same. So despite the high unemployment rate that we have right now and the economic uncertainty, the same percentage paid during the first week of October, even when many of the stimulus programs have expired. However, this is just the first week of October, so we'll have to wait and see to see how many people paid the rent in full for the entire month. We'll have that information for you in a couple of weeks. But this is a good start to see that we're on track what we saw during last year. So with this drop of mortgage loan forbearances and some positive numbers regarding people paying their rent on time, these are obviously good indicators of our real estate market. Will this change? We will have to see, and I'll continue to post real estate market updates. In my opinion, we could see further stability of a real estate market if we see the following things happen. Number one, and that would be if the eviction and foreclosure moratorium gets extended yet again. And number two, if another stimulus package gets approved soon. We will have to see. I hope you enjoyed watching this video. If you did, please hit the like button. I greatly appreciate that. And also subscribe to this channel if you haven't done so already. And also don't forget to get your 2 free stocks because Webull is giving away 2 free stocks with each of those being valued up to $1,600 each when you deposit $100 on their platform within 30 days of signing up. So let me know which free stocks you receive. Also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.